Welcome back. Vukile Property Fund has had a bumper year with both of its properties in Spain and South Africa delivering growth and recording low vacancy levels. This resulted in a 6% rise in funds from operations and a 10.5% jump in its total dividend to 124.2 cents. And join me as we recap on the year that was is CEO of Vukile, Laurence Rapp. Thank you so much for your time, Laurence. An outperformance, that's how the numbers have been described in this reporting period. And encouragingly, the South African portfolio also producing positive metrics there. I do understand that the year ended on the 31st of March. There's been a lot of election talk, as we started off the year. Have there been no election risk or uncertainties trickling to the business?
Sanati, hi. Thank you very much for having me on the show. Look, the last few days, obviously, there's been a heightened concern around safety around the malls. Obviously, the memories of June 21 still ring quite loud. So we have been, particularly vigilant around our assets, but fortunately, it's been quiet. So I think, forearmed is forewarned, and I think we are prepared. But at the moment, fortunately, it is quiet on the ground.
Yeah. And would you describe your tenants at this point as resilient and basically shrugging off the macroeconomic headwinds here in South Africa?
I think it's a mixed bag, to be honest. When you have a look at it, we're seeing, more winners and losers as opposed to everybody sort of performing in the same direction. You may, for example, see a fashion retailer having a bad season because they got their fashion wrong, whereas their competitor called it correctly and is doing very well. I think the grocery market, we all understand the challenges that Pick n Pay are having at the moment, whereas ShopRite Checkers are doing very well. But on the whole, we're very happy with the performance of the portfolio. The tenants are doing well. But there is no doubt that the consumer, has got some signs of strain. But all in all, I think, we're very happy with the results and what we've produced.
Yeah, and really also quite interesting, as you mentioned, for example, the fashion retailers, of course, they also have been impacted by the Transnet challenges where sometimes they don't get their stock in time for that particular season. Let's go on to Spain because, of course, you benefit from the strong economic fundamentals there. But the expectation, according to your results commentary, is for Spain's economic growth to slow in 2024, which for me is interesting considering the fact that we're expecting the European Central Bank to start its interest rate cutting cycle tomorrow. And also we are seeing inflation also there stabilizing. Just talk to me about that growth expectation and if you expect any significant impact on your business in terms of the slowing down of that economic growth.
No, we certainly wouldn't expect any negative impact on the business. I think you're still seeing growth that is outperforming the Eurozone.
Okay.
It's obviously still positive growth, and it's a marginal decrease that's being forecast. But I think in many respects that doesn't take into account what might happen if there is that drop in interest rates as we're all anticipating. So you might get some of that enthusiasm back into the market. But really a major driver of the Spanish economy has been the ongoing growth in tourism. And not only are you seeing record numbers of tourists, but you're seeing record spend per head of the tourists coming in. So that, I think, is probably not going to slow down in any time soon. And that does provide a boost to the economy. And, we benefit from that in our shopping centers as well.
All right. Before we actually, because it seems that time is running fast, but of course, I don't want to let you go without looking into corporate action. You were making an offer for Capital and Regional, but after some talks with a major shareholder, Growth Point, you decided to abandon that bid. What were you seeing in Capital and Regional, and what is it that you couldn't work around with Growth Point?
So I think, in property, really, so much of the value you create is when you buy your assets. We think it is a good time to be buying in the UK. We think in many respects, rentals have, rebased very significantly. Yields have pushed out. Cost of debt is high. Yes, the consumer is still under pressure, but it is still a major market. The centrality of the UK, I think, is never going to go away.
Yeah.
So we sort of felt it was a very good entry point. The time in the cycle was right to get in. We liked the size of the deal and that it wasn't too big. Nice platform, something we potentially could grow. Unfortunately, I can't go into the details around what we were not able to reach agreement on. Unfortunately, we just couldn't find one another. We tried. But ultimately, at the end of the day, if the deal doesn't make sense, we're very comfortable to walk away from it and we had to do so. But it would have been a very good entry point for us into the UK had we been able to get in on our terms and conditions. That wasn't the case, and therefore we walked away.
All right. Well, before we wrap up the conversation, another corporate action move that you did was an acquisition of a BT Gibbs that is now called the Mall of Umtata. I understand that there are nips and tucks that are underway there. Talk to me about the vision that you have for that mall and the rationale for the surgery.
Absolutely. Look, I think that fits perfectly into our portfolio. It's a dominant asset that we feel has been undermanaged historically. I think not enough money has been spent on it. The tenant mix isn't ideal. And that creates the ideal opportunity for us to get in, bring our bottom-up property expertise, in this case, working with partners, Flanagan and Gerard. We own some malls together. We work exceptionally well together. And it's about implementing that. So really, it's taking an asset that is exceptionally well located, good fundamentals, but being undermanaged, and we can now look to try and increase value, through really putting in better tenanting, better tenant flows, etc. And that's what's currently underway already.
All right. Well, thank you so much for your time and just allowing us to unpack those numbers that came out from Vukile. That was CEO of Vukile, Laurence Rapp.